had a guest yesterday who said $800 by the year 2030. Very positive because of all the different things that NVIDIA brings that all the other chip makers don't have the ecosystem that NVIDIA has. And that's something you've focused on, right?
Yeah, actually, kind of the unsung hero in a lot of these high-tech companies like NVIDIA is their software engineering prowess. And that's really an enablement story to optimize and help developers, get up to speed quickly with their platforms. The company is releasing hundreds of what it calls NIMs, or NVIDIA Inference Microservices for AI. These are little AI boxes, if you will, that are optimized on NVIDIA hardware and allow developers to take advantage of industry platform AI models, but optimized for NVIDIA hardware, and getting them up to speed quickly on that hardware so that they can, go work their magic with it. And so really that is one of NVIDIA's core strengths, in addition to its obvious silicon prowess as well.
Using its GPUs to dominate the gaming and artificial intelligence businesses, NVIDIA, a global leader in graphics computing and networking, has amassed a $1 trillion valuation. With a price target of $185, Jefferies reiterated its buy recommendation on NVIDIA on November 22. The company predicts that demand for NVIDIA's Hopper products will remain strong until the middle of 2025, while supply issues for Blackwell products are anticipated to persist well into late 2025 and possibly 2026. Further evidence of strong demand for NVIDIA's products was provided by insights from the SC24 Industry Conference, which was in line with the high levels seen in 2023. Beyond estimates, NVIDIA reported a record $35.1 billion in overall revenue, with $37.5 billion projected for the upcoming quarter. Revenues are expected to be greatly boosted by the future Blackwell chips as well. Gross margins may be momentarily impacted by Blackwell's initial ramp-up costs, but the business anticipates that they will normalize around mid-70% levels in the second half of the year. NVIDIA has arrived at the time that investors and NVIDIA watchers have been anticipating. The tech giant's Blackwell chip and architecture will soon be formally unveiled. What makes this so crucial? Due to a few factors. First, Blackwell incorporates the most recent developments from NVIDIA, showcasing the company's technological prowess and possibly guaranteeing its market leadership in artificial intelligence, AI. Additionally, this platform has the potential to revolutionize customers' AI initiatives, which should increase NVIDIA's income. This behemoth has established itself as a key player in the development of this rapidly expanding business as the AI boom has proceeded. In order to establish a comprehensive AI empire, NVIDIA has introduced a wide range of associated goods and services in addition to dominating the market for AI chips. The Blackwell release will play a significant role in NVIDIA's overall strategy. Here are some things to look for as the launch approaches. First, a quick overview of NVIDIA's current narrative. Previously, AI clients were the company's main source of income from its graphics processing units, GPUs. GPUs were primarily used in the video game industry only a few years ago, and NVIDIA's earnings were far lower than they are now. However, the GPU's multitasking capability made it perfect for applications far beyond gaming, and it demonstrated significant promise in the field of artificial intelligence. NVIDIA's revenues and share performance skyrocketed as it expanded into several markets, including AI. The stock of NVIDIA is on track to gain 2,300% over the last 5 years, and the company's earnings have increased in the triple digits in the most recent quarters. NVIDIA and investors may now anticipate improvements in earnings and share price performance as Blackwell approaches. Let's examine what we currently know and what to anticipate from the Blackwell release. NVIDIA has already begun introducing this cutting-edge new platform to its clientele. The business shipped 13,000 sample GPUs to clients during the third quarter. Additionally, during the quarter, businesses like Oracle and Microsoft announced on social media that they had begun receiving Blackwell. On October 8, Microsoft Azure posted on X that it was the first cloud to operate NVIDIA's Blackwell system with GB200-powered AI machines. Additionally, NVIDIA stated during its fiscal third quarter 2025 conference call on November 20, all of our main partners now own Blackwell and are trying to raise up their data centers. We are incorporating Blackwell systems into our clients' various data center setups. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video. It might take some time for NVIDIA to serve every customer and realize its full revenue potential because demand for Blackwell has outpaced supply. However, there are grounds for optimism regarding notable expansion even in the initial phases of product launch. NVIDIA has predicted that Blackwell's revenue in the current fourth quarter may exceed its initial estimate of several $billion, which is why the company says it is rushing to increase supply. Next, we opt to search for patterns among NVIDIA's clientele. Has their attempt to scale up Blackwell been successful? Do they provide their clients with Blackwell-powered goods and services? Customers are currently getting ready to provide Blackwell at scale, according to NVIDIA. It will be important to monitor announcements or social media posts from cloud service providers and other important NVIDIA customers for any updates. This is a significant occasion for the company because NVIDIA has stated that it is increasing Blackwell production now in the fourth quarter. Naturally, NVIDIA's remarks regarding demand or the launch's pace should also provide us hints about what to anticipate in the upcoming months. Additionally, we must remember that Blackwell is an opportunity that will go far beyond this initial phase of implementation. And after this stage is over, there should be further advantages. For instance, as NVIDIA handles the launch's logistics and costs, its gross margin will be lower, in the low 70% area. However, after the production and delivery process has become more standardized, it will return to the mid-70% level. This launch should set the tone for several quarters to come. So if you're an investor or a prospective investor in NVIDIA, now is a critical time to keep a watch on the business. In its third quarter earnings announcement, NVIDIA delivered another round of explosive growth as planned, but investors appeared to be overlooking the most amazing aspect of the accomplishment. The company consigned it to the CFO commentary section of its earnings report and made no mention of it during the press release or earnings call. The majority of investors are now aware that NVIDIA's growth is being driven by the data center industry. Even though NVIDIA's business includes everything from gaming to driverless cars to visualization tools like the Omniverse, its success in the data center industry, which is fueled by AI's rapid growth, has stolen the show and now accounts for the great majority of NVIDIA's earnings. The third quarter of fiscal 2025 saw a 94% increase in overall sales to $35.1 billion, but the data center segment had an even greater boom, rising 112% to $30.8 billion. Nonetheless, NVIDIA distinguishes between two types of data center revenue. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video. It generates income from computation and networking. Processors and memory chips are examples of compute components that power server applications. Switches and routers are examples of networking components that give apps the connectivity and security they require to function. Since the computing components are what drive AI training and inference, it makes sense that computation accounts for the majority of that revenue. While data center compute sales increased 132% to $27.6 billion in the third quarter, data center networking revenue increased only 20% year-over-year to $3.1 billion. Even though NVIDIA stated multiple times during the earnings call that the company is supply constrained and that it expects those constraints to persist for the next several quarters, particularly on the Blackwell platform, the data center compute figure appears to be the best representation of the underlying growth in the company's operations. Additionally, data center compute revenue climbed 22% sequentially, which was higher than the company's overall 17% sequential growth, and the data center's consecutive growth of 17%. The data center compute revenue performance over the last few quarters is displayed in the chart below. The foundation of NVIDIA's AI product is the data center compute platform. Its solutions include software development kits, SDKs, GPUs, DPUs, AI enterprise software, and its DGX cloud, an AI training as a service platform. It also speeds up the most compute-intensive applications. All of that contributes to the rapid growth of the data center industry and makes it exceedingly challenging to compete with NVIDIA. The second noteworthy statistic in the above table is that, although NVIDIA's revenue growth in the data center compute segment slowed down year over year, sequential revenue growth, possibly a better indicator of growth, accelerated from 17% to 22%, lifting overall revenue from 15% to 17%. If the company expanded at that rate for 4 quarters, sequential growth of 22% would equate to a growth rate of 122% year over year. The company may continue to grow at a rate comparable to that during the course of the upcoming year, given the introduction of the new Blackwell platform and management's remarks that demand will exceed supply for the upcoming quarters. The results release caused a modest decline in NVIDIA's stock price, with the company predicting that year-over-year revenue growth would drop to 70% in the fourth quarter, and that the top line would reach $37.5 billion, plus or minus 2%. Investors appeared to find the guidance to be lacking. Nonetheless, NVIDIA has a history of exceeding its forecasts, and with the data center compute business's explosive growth and the locked-in demand for its Blackwell platform, it appears likely that it will do so once more in the fourth quarter. Don't be shocked if NVIDIA surpasses that prediction once more in 3 months. The company is burning. It keeps producing excellent results, and there isn't much stopping it. The most straightforward justification for purchasing NVIDIA is your belief that it will continue to lead the AI market and that its clients will be able to profit from AI in the future, allowing them to purchase even more NVIDIA products. NVIDIA continues to provide flawless sales and profitability growth in spite of worries that the AI megatrend is slowing down. Although NVIDIA's stock price has increased by 130.7% in the past year, its valuation is still deemed appropriate given that its earnings have increased by 112.6%. Analysts, however, predict that growth will slow, predicting EPS of $4.37 in fiscal 2026 as opposed to $2.95 in fiscal 2025. Nevertheless, that is a 48% increase in wages in a single year. NVIDIA's fundamentals growing into its present valuation is the simplest method for the company to outperform the Dow over time. This would entail maintaining profits growth at a pace that can sustain the disproportionate stock gains currently observed without pushing the price further. Here's an illustration of how something might occur. Assume that during the next 5 years, NVIDIA's earnings will increase by an average of 25% due to the cyclical nature of the semiconductor business and some margin erosion from the competition. It will probably outperform the Dow and the S&P 500, which have averaged about a 10% yearly gain over the long run and an even greater 13.5% over the last 10 years, if its stock price increases by 20% on average throughout that time. Additionally, its price-to-earnings P/E ratio would decrease from 56.1 to 45.8. After 10 years, its P/E would be 37.3 if it continued to expand at the current rates. In the stock market, nothing is more potent than consistent earnings growth. To be a great investment, NVIDIA doesn't need to keep doubling its profits annually. But at this point, it also can't afford to see its growth slow much or the stock start to appear overpriced. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, Open the description below, click the link to my Telegram channel, and join our growing community.